Hi, I'm Andrew Roberts. I'm here today with Zee Razaq and we're going to be talking SSAS pensions. Why should somebody have a SSAS?
They are an entrepreneurial tool that you can only have if you're already a limited company and a director, and they are a company pension scheme. And the beauty of these tools are potentially you can take about 12 million outside tax. You've heard me, 12 million, and we can use them as an investment fund, not like a traditional boring pension.
Surely if I've built myself up this commercial pension scheme that we're talking about, which we know you can drop in your commercial property in there, you can't put residential in, but you can put commercial into your portfolio. Surely I've got to sell all of that property when I get to 65 and buy myself an annuity and basically live on a derisory income for the rest of my life off that annuity. Is that a myth or is that fact?
Very good question, and this is the big difference between a SSAS pension and a traditional pension. SSAS pensions, like many pensions, is actually 75 is the age that you're supposed to change potentially to annuities, but those are for traditional pensions. SSAS pensions are not included in this because that you are the master trust, so you're not determinant on someone else's show and they decide, you decide, and therefore annuities are not in the bracket if you don't want them to be, and that's the big difference maker. You mentioned about 12 million, and what I mean, because you can have 11 members, and if you look at the current threshold, it's about 1,073,000 with a bit of change.
Yeah.
And if you times that up, that's how you can use it. The other big benefit why you want that is inheritance tax. They are an amazing tool to pass intergenerational wealth. To be honest, it is the biggest and most privileged tool in the UK.
You said supposed to retire at 75. Now, come on, what do you mean? You either retire or you don't retire. You either buy an annuity or you don't buy an annuity.
That is a very good question. Whereas every other pension, looking at the pension legislation, and you'll know from speak to financial advisors, at age 75, if you have a normal pension, they pretty much, if I use the correct word, tell you you've got to change it to an annuity because that's the official age under the legislation. However, with a SSAS, it's not like that because you can continue because you choose, because you are the master trustee, and therefore you can choose what you want to do. The biggest aspect around it is your connection to your sponsored employer, which is normally the limited company that you also run. So you've got to have that planning as the overall. Does that make sense?
No, it does make sense. So let's go back to inheritance tax. I mean, you say it's really efficient from an inheritance tax point of view. You're talking inheritance tax. Are we talking because you don't own the property, your limited company doesn't own it, and this pension is effectively a trust wrapper around the property that it can pass generationally via this wrapper?
Absolutely, and this is why you have to educate your beneficiaries, which tends to be your children, about how to use this, because provided they are members, and you put them as the beneficiaries, they can get that wealth within that wrapper, and there's some implications if they don't have the understanding how to receive that money, depending on your age. But if you educate them wisely, it will be tax-free unless they take it out of this wrapper. And so this is so huge because we know what inheritance tax is, the dreaded tax, 40%. So this is outside your estate. So you don't have to, like you do with limited companies, what we've probably seen where we have to set up family investment companies and do some complex stuff. You don't have to do it with this. So because this is already outside your estate. That is the big benefit, and it's huge.